Hello guys, welcome back to Sogai. How are you all doing? So guys, this is part 2 of the video. In this, we will understand trend lines. As I showed you before by marking levels, support levels, these are the levels. Now when we trade between these levels, we aren't able to trade here. If you remember earlier, I showed you some other charts as well, like this chart here. So for example, we don't really know much about these specific levels here, and we also don't know about the various levels that exist in between. So what exactly will we do in this situation? The horizontal levels positioned both above and below are already clearly marked, but it is also crucial that we utilize the levels present on the sides as well. Only then, and only then, will we truly be able to understand the intricate detailing of the market's movements. For example, right here, the levels are clearly marked in this particular manner, okay? Originating from the slab, okay, the slab itself. You can clearly observe here that there was a significant reversal from this point, another distinct reversal from this point, and yet another reversal from this point. Then the market simply couldn't manage to go up any further and consequently reversed from this very spot as well. Okay, so this is indeed that important level. Now let's proceed further down. If I were to look at another chart, for instance. Now, whenever we are in the middle of the market or somewhere else and we know that the market is moving down from the resistance, that means it is heading towards our support level, then the scenarios that will form in the market will be towards the downside. So what will we do? We will proceed to mark the significant levels. We will indeed mark the important levels. And then where exactly will our primary trade be located? We will carefully consider the trade in this specific downward direction, okay? So this is precisely how we can effectively mark the crucial levels.
If you want to learn trading, then join our official Telegram channel, where I share daily technical analysis, market insights, and educational content to help you grow as a trader. Start learning and improving your skills today. Link in the description.
Now we have marked this level. Now, whenever, like we have marked this level, when the market touches this level, touches this body and reacts, whenever the market comes near this level, see this trade of ours, if we take a trade at this level here, it would be profitable. This trade, if we take it above this level here, it would be profitable, right? Again, so the market has come downwards. Now, I will explain to you what this whole scenario is. Now, let's understand the trend line a little bit, okay? So I'll look at another chart for a moment, okay? It's the same thing. Now, for example, the level here, why do we only and exclusively mark this particular label? We meticulously mark levels so that we can clearly understand the prevailing trend and precisely see in which direction the trend is currently moving. Okay, this market is unequivocally moving downward, so the trades we take, most of our strategic trades, will be predominantly in the downward direction. Why? Because our mind has already fully realized, our mind inherently knows that the scenario forming in the market is undeniably downward, so we will take many trades in the downward direction. The first significant reversal happened, the second reversal occurred, and we could have potentially traded on the third reversal right here. On this specific candle, it could have been quite profitable. So this is precisely how we mark these important levels here. Now I will mark pure and unadulterated levels for you and also show you by taking one live trade here. Okay, so the level here has already experienced a clear breakout, and there is also a distinct green candle as well. What exactly will we proceed to do here? We will meticulously draw a precise trend line, and then we will definitively decide whether to take a trade or not. So from this particular level, look closely. You can clearly see this specific level, this subsequent level, and also this body. I will meticulously mark them. So if I meticulously mark all of these, we can clearly see that there is a significant and identifiable level in the market here, and we can effectively utilize that important level for our trading decisions. If the market comes down a bit, we can place an upward trade. I have marked this body like this and marked this level and marked this level as well. So if the market comes down to our level, we can place a pretty good upward trade. If the market closes above our level, we can set up scenarios like this, but right now we have to look according to this level. If the market breaks downward, I will go for the downward action. Okay, so guys, I have placed a trade for the downward direction here. If the market goes up a little more, I will take another trade for the downward direction. So guys, I have placed 4 trades here for the downward direction. You can see here what the scenario is. The scenario will remain exactly the same. The sentiments that form in the market are based on our trend lines and support resistance levels. The second and third things that come into play are candlestick psychology, which I will explain to you in upcoming videos, okay? So for now, what you need to understand is the support level, which you must have understood by now. If you haven't watched my previous Very important video on support and resistance. That's perfectly okay. The second crucial thing we need to consider is our trend line, right? So it's also incredibly important to fully understand how trend lines function. By effectively combining these trend lines with established support and resistance levels, when you meticulously place a trade here, that particular trade has a much higher potential to be significantly profitable for you. Otherwise, there are numerous scenarios where your valuable trading fund could be completely lost. So as I meticulously explained to you earlier, you can clearly see here how our trade is moving downwards so beautifully and smoothly, right? And this specific trade has become quite comfortable and reassuring for us here. So when you carefully draw a trend line and you suddenly realize that you can't quite understand the precise level here, that's exactly what you truly need to pay close attention to. If you slightly increase the zoom a little, now you can fully understand. You can clearly see the very first touch, the second distinct touch, the third attempt failed right here. This is the exact level, very clearly defined, right? Now here, the first successful interaction happened, the second attempt unfortunately failed, the third one worked exceptionally well here, and then it gracefully came down. Right? When it came down, you can see towards the backside. When the market came down here, there were some strong red candles formed. So the same thing could happen here as well. Because there's this level and this is one green red candle, which is actually a very strong red candle. All right now you might not fully understand some of the intricate things presented here because of a current lack of comprehensive knowledge, as you likely won't quite grasp how I have effectively applied candlestick psychology in this specific context here. I will explain those important things to you as well. In the upcoming video, we'll see whether the psychology of this particular level matches with the candle or not. Based on that, why I took the downward trades here will become clear to you later. All right? You really need to understand this concept step by step. Now here you are clearly understanding the overall trend line, okay? So to understand the trend line, you simply need to do this wherever there has been a reversal. Look, let me show you some more levels here. Let's take a look at a few more, okay? So I'll do this one. Let's move to the real market for a bit in currencies. Let's look at currencies here, EUR, USD. Okay, let me do this. I'll remove these. Now, what I'll meticulously do here is I'll specifically use those particular currencies that are non-OTC. Why, you might genuinely ask. You'll understand this much better and more profoundly because when you truly learn on the real market, you'll understand it properly and grasp it exceptionally well. You must have undoubtedly noticed that the signals or calls that frequently come in the group, they consistently come only on the real market, and this is a crucial aspect to consider. Okay, so here we are opening up some actual real-time market charts, and now we will carefully look at these particular charts to thoroughly observe what specific scenario is currently going on in each respective market, and we will understand everything accordingly. Okay, let's proceed to open them now. At this very moment, none of the markets presented here are performing particularly well or showing significant activity. Okay, so here, the two most important things are that you need to know about the market and which market is actually active. All right, if the market is moving like this and not performing well, then you can't trade on it. All right, okay, so what exactly does this particular pattern tell us? If we carefully draw a significant level from this specific point, if we precisely place this important level, extending it from here to here, and if I then adjust it just a little bit, then by utilizing a bit of our own inherent thinking, our highly capable humanoid mind, if we address it in this insightful way, you will clearly understand what kind of scenario is actively playing out here. All right, whenever the market moves even slightly upward, a distinct red candle immediately appears, it continues to go up, and then another red candle appears, and again a prominent red candle appears. All right, so what could be the scenario here? If we look closely here, why exactly did this red candle form? Some people might only draw this particular level, but you also really need to draw these important horizontal levels as well. All right, I've marked this point here, and I'll also mark this one here as well. So as you can clearly see here, reversal, reversal, reversal. When the market moved significantly up and then came down, it touched this important level. When it went up, we can also mark our level here. All right, I'll mark this level here as well so that we know from where the market moved. I'll copy this and place it at this level too, okay? Now you can clearly see what the market did for a period of time. It initially went up from this point, then consolidated here for a while, subsequently came down to this specific level and then moved up again. All right, when it broke this level, you can see it here. When it precisely broke this significant level, there were two distinct red candles. Then it moved upward again with considerable momentum. All right, it went up from this particular point here. There was a crucial level, and from that very level, the market came down quite significantly, then again moved slightly downward for a brief period, and then powerfully pumped up again from this exact location. So we have two important levels here. One is the prominent upper level, and if we mark another additional level, you will now fully understand why I am meticulously marking this second level here. You can clearly see here that the market moved downward at this specific level and again downward at this very same level. So this particular level has now been decisively broken here. If we place a horizontal level here, and even on horizontal levels, if we get a clear breakout, then we can confidently consider a downward trade for sure. So this is one effective way we can strategically place a trade here. All right, so what happens if the market moves significantly downward, if this crucial level that I've meticulously marked, if the market gives a definitive closing below this specific level, if it truly closes below, then I will absolutely and confidently go for the downward direction. Because here the inherent chances of our carefully planned trade being highly profitable are indeed very high. If the market gives a clear and decisive closing below this particular level, we'll consider it a genuine breakout. And if it's a real authentic breakout, not a deceptive or fake one, then it will consistently keep closing below this important level. And if it closes below, the very next candle can potentially be a strong red candle. Otherwise, it will be a vibrant green candle. So guys, I've deliberately placed a trade here for one upward candle because at this precise level, as I was just saying, if it had closed at this exact level, but it unfortunately didn't close there, that's precisely why I took a trade for the upward direction for a substantial $500. So the significant level we've carefully marked and the intricate scenario we've meticulously set up, you can clearly see here how confidently and precisely we've taken a trade at a truly good and advantageous level. Because we profoundly know how the market is dynamically moving here, I've specifically started this comprehensive course to help you thoroughly understand it and navigate its complexities. You can clearly see and fully understand how the market truly works here, right? And you'll be able to thoroughly grasp the intricate details of the market because a significant number of people just come and impulsively start trading, and when they do, they often end up facing very substantial and regrettable financial losses here. I absolutely do not want people to incur any unnecessary losses, so for now, you should focus solely and completely on diligently gaining essential knowledge. You need to truly focus your attention on knowledge here instead of profit. If you focus on knowledge, profit will naturally follow because once you pay attention to learning, you'll understand how things work. So you need to focus on knowledge, all right? Now, why isn't the market moving upward here? What is the name of this particular pattern we've formed? Many people think that this has been set up incorrectly, that it's all wrong, but it's not wrong at all. This means that the market is indeed taking up space here, meaning the trading volume is very low at this particular point. There isn't much volume present here, because if there were sufficient volume, the market would be moving upward, but it's not able to. That means the overall volume is very low here, but as the market starts moving upward, volume will certainly start coming in. So this is how our levels truly work here. The trend line is used here. Now let me show you one more chart and then we'll stop the video right here. For example, let me tell you one important thing. You should never draw just a single level. Okay? So first of all, you can either carefully mark the levels like this.
If you want to learn trading, then join our official Telegram channel, where I share daily technical analysis, market insights, and educational content to help you grow as a trader. Start learning and improving your skills today. Link in the description.
For example, you have clearly marked this particular level, right? Okay, so you will meticulously consider this entire level just like this. You can precisely mark it in this specific way, then carefully copy it, and just as we typically mark support levels, you have to diligently do it the very same way here, always considering a little bit more above the primary point. So you can effectively mark these important levels in this manner, precisely as I thoroughly explained in the context of both support and resistance, emphasizing that it absolutely cannot be a mere single level of resistance or simply a single level of support. Instead, it is fundamentally an entire area that we comprehensively cover and analyze. In the very same way, if you wish to accomplish this, you can effectively utilize a parallel channel. And what you are required to do within a parallel channel is quite simply, just like you would typically draw a standard trend line, you can perform the exact same actions and principles here. So you will distinctly mark this specific level in this fashion and this other level in a similar manner. And later on, you can conveniently manage and adjust it as per your precise trading needs and requirements. So according to this comprehensive approach, you can confidently place your trades here. If you prefer to use a trend line, you have the option to use a double trend line. Otherwise, if you wish to employ a parallel channel, you are certainly welcome to use that instead. Similarly, if you intend to mark double support and resistance areas, you can efficiently use a rectangle tool so you will not have to meticulously draw it twice. Sometimes I personally use a rectangle in this very effective and efficient way. Most of the time, I typically use single levels, but I always make them double because that's precisely how it effectively works. So that's essentially it. I sincerely hope you thoroughly enjoyed this video, and if you are finding our comprehensive course helpful and easily understandable, please do like the video. If you are entirely new to the channel, please consider subscribing so that I can bring even better and more engaging videos for you. So that's absolutely all for this video. Thank you so very much for watching this entire video. Bye bye.